As you know, this is a session that streams both live on GoToWebinar YouTube, and whether you're watching this live or on either channel, or indeed watching on catch-up, fantastic to see you here. I hope you've had a great weekend. Right, okay, I just had a little technical issue there, just connecting to YouTube, but all is good now. So thank you one and all for popping in, and for saying hello, and it's always really appreciated. And I assure you, had a great weekend. Now the Christmas and holiday period is well in the rearview mirror, but there's some very, very interesting stuff going on today, which I'm looking forward to sharing with you. G'day, Brian. I hope all is good. Hi, Mark. G'day to Hugh, and I hope you had a good weekend too, Shane. Thank you very much. Hi, Neil. Hope you're well today. Right, okay, before we start, because we're looking at live markets, of course, just to remind you that this is for educational purposes only, please remember to do your own due diligence on anything you see here. Make sure that you follow trading plans consistent with your risk profile and manage risk well on entry and exit consistent with your personal objectives and financial situation. So all is good. G'day, Jonathan. I hope you're very well. Good to see you, mate. It's been a little while. I think if I've missed you one of the sessions, apologies for that, but it's great to see you here either way. So what we'll do is a standard format. We'll look at some headlines, we'll look at some details behind those headlines, and then we'll have a look at some charts and see what we can find of interest. And there is a couple that are shouting this morning. So let's start with the news. Of course, US equities hit record highs again after the soft jobs data on Friday. With that non-farm payrolls release. Interestingly, Trump released it on Truth Social 10 minutes before it was due, so he obviously gets the heads up on it before it's released to the markets, but decided to push it up onto Truth Social straight away, or whoever does that for him. And so we got a little bit of an odd response to when it came out. Sort of moved away from the fair market rules that everybody should find out at the same time. If you got Truth Social, I'm sure you did well out of that. Anyway, that soft number raised hopes of a Fed rate cut in first quarter at some stage. At this stage, it's sort of, let's have a look, shall we? At this stage, let's just pop onto the CME Fed Watch and see how things have changed. Very interesting news this morning, by the way. Obviously, no expectation of any cut in January at this stage. You can see there it's 95%, but March is what it's all about. And so you can see there, oh, that's even worse. So this was 50-50 last week, but you can see it's even worse at this stage with 70%, suggesting that there may not be a cut. If we just sort of mosey on down, you can see here that prior to that non-farm payrolls, of course, it was slightly higher than that, but you can see a week ago it was 50-50. So yeah, somewhat interesting. And that's one of the reasons I think why markets are down this morning. But there is some other big news. We have big data this week, and of course we get earnings season, which kicked off last week, ramping up. Geopolitics remains in the headlines, and news that came across. Apparently, the Department of Justice in the US have served the Fed. Okay, the Fed chairman has released a very interesting statement, suggesting that this has got nothing to do with the renovations, which were approved by the Senate Banking Committee. But it's this: the threat of criminal charges is the consequence of Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following preferences of the president. So really, really interesting. I will post that into the chat so you can go on and look yourself at that response from Paul. But as I said, very interesting. Let's have a look at how markets finished on Friday. And you can see they're quite buoyant overall. All four major indices doing okay. All the Magnificent Seven looking good. If we look at the futures, you can see there that futures are looking grumpy on the back of that. On the back of what's just come out, the European futures in Asia today are down, although they're likely to be a cautiously positive open. Overall, Asian markets are generally, or were generally, following that positively from Wall Street. Nikkei's closed public holiday in Japan. ASX was up 0.75% in early trading. Let's just see where it is now. Let's just do an, oh, it's halved that. It's halved that. Look at that news. Interesting. There's, we see material stocks are neutral, but there's one material sector that's doing particularly well. We'll talk about that in a moment. US dollar index has edged up towards monthly highs. It'd be interesting to see what response that has. We'll have a check-in on all of these issues in a moment. But gold is testing record highs today. We'll check out the chart in a moment. Copper's bounced after what looks like a break and retest pattern. All is bouncing from long-term support on the geopolitical situation. Of course, we had the weekend's major news story was US versus Iran. US did bomb Syria over the weekend, but now there's protests in Iran relating to the state of their economy, and the Iranian government have been quite hard, protesters to say the least. And the US is the US narrative is one of we might get involved with Venezuela and Greenland and Mexico and Colombia. Anyway, Bitcoin isn't really moving very much these days. It's trading mid-range, about 91,000. And as I said, US earnings season ramps up this week. US CPI is the headline acting data this week. If you just check out what's happening, there's that statement from Fed Chairman. Quite staggering. Anyway, so as I said, bank holiday in Japan today. Not a great deal coming out today in terms of data, nor tomorrow, really. There's nothing there which is going to influence significantly. The ADP weekly employment change is a relatively new data point. That used to be a monthly report, but now they're doing it weekly. Release week on the first Tuesday about. So that's interesting. How indicative it is. I mean, that data has been there, I think, but it shouldn't be released officially. Here's the major act, which is on Tuesday night our time. It spills over into midnight if you're on the East Coast, but you can see there's the inflation expectations pretty well static. We've got lots of housing data out this week. Got new home sales out on Tuesday night as well. Chinese trade balance is going to be really important. We are expecting a tick up in that. The imports we watch, as well as exports. And then we've got PPI coming out of the US as well. So a bit of an inflation week in the US, which was jobs week last week. So that's Wednesday night. Keep an eye on that. More housing data with the existing home sales. It's more important than the new home sales. Elsewhere, it's really quite a quiet week. We've got some GDP numbers coming out of the UK. On Thursday, trade balance coming out of the Eurozone. Also, weekly unemployment coming out of the US expected to be static on Thursday night. And that's really about it. We've got some industrial production numbers coming out as well on Friday out of the US. So it's not a massive week in terms of data, apart from those big CPI and PPI numbers coming out of the US. If we look at the ASX, sorry, if we look at Asia as a whole, you can see there that the response to the Nikkei doesn't count. You can see there the other indices, because it's closed, the other indices doing okay at this stage. See, yeah, moment to go. So there you go. You can't get much hotter than that in terms of news. Right. Okay. Let's check out some. Let's check out some other futures data. You can see that there's weakness in oil. Gold is soaring. Copper's doing well. USD is weakening this morning on the back of that news. So strength across all the other currencies versus the USD. The Euro and the Swissy looking particularly strong. We'll check out charts again in a moment. Let's start with the US 500 daily. So you can see those record highs on the futures on Friday, a little bit shy today, and you can see how that's just, as that news is being processed by markets, that's dropping. If we look at the USD, that's also under a bit of pressure. If we look at the US dollar index, the last couple of hours, it's got hurt a little bit for sure. But one thing that isn't hurt is gold. There is that previous record high at 4534. And you can see we've breached today, just a little profit taking pullback we can see happening now. So yeah, so you've got a nice line of sun to say, look, this is going even higher. So it did actually touch 4,600 almost on the button, 4,692. Nice round number. Silver is doing much the same. If we put it on daily chart, you can see there record highs on silver. And copper is doing pretty well again. So we had this sort of pullback again. We get these regular pullbacks on copper. They're not insignificant. This is record high that we hit on the 6th of Jan. Had that pullback, bang coming in, nice retest of this level. As I said, so you'd be watching 606 for an indication that this might go higher still. If we look at oil, there's the bounce on the back of that increased geopolitics. Still in a long-term downward trend channel, so this level is quite important. But there you can see, there we go. So $60 looks really important for USO USD, so just keep an eye on that as a level throughout the week. I overwrote a Bitcoin chart because I got excited about gold stocks. And there's Bitcoin trading mid-ranges for completeness. Nothing there. Here's the US dollar yen. You can see that significant drop in the US dollar, a little bit of a recovery right now, but this looks like a double top formation. I will keep an eye on this level here at around about move. Around about 157.80. If we manage to make it back over that, that'll put us back in this range here, so we could see a move back up to 158 and change. The Aussie US, you can again see US weakness as the Aussie increase. Put this on a daily chart. This is a sort of, so we pulled back from in the last 3 days of last week, seeing a bounce today, not surprisingly, off this 67.70, 66.75 support. So 67.15 looks interesting, possible 20 move plus up for that. The higher probability trade is probably if we breach that. These are highs on the Aussie, just for context, not seen since October 2024. So we're on about 15 months highs on the Aussie US. Yeah, how about the Aussie yen? Let's just check in on that, which is up as well today. This looks like an interesting chart to me on the daily. You can again see that we are pushing. We're looking for a trend continuation after this retracement that we saw. To take this out a bit, I marked that on the chart before as a potential line of pause around 107. But if we look at the hourly chart for more detail, then really this level here is the one that I'm keeping an eye on at 105.85. That would be a breach of that high, which was back on Tuesday last week. And so a breach of that could see it up significantly. That's so on 105.83. You might wait until 106 till it breaches a nice round number, then a possible move up over the course of the day, depending on what happens. The RBA are 75% likely to pause, 25% likely to raise rates, somewhat irritatingly, on the 3rd of February when they next meet. The Swissie's doing quite well this morning. Let's have a look at the Swissie yen. Sorry, the Swissie, the US Swissie. Let's just check that out. So there you go. You can see again that weakness of a key level here around about 79.7, 79.69. But it does mean the Swissie is quite strong against other currencies. If we look at the Swiss yen, for example, there's a very nice breach. Let's just pop on the hour chart after we pop this line in. So there was Friday's highs. I'm not paying any attention to that. The level I am paying attention for is this 197.67. I think that looks really interesting. You can see this 1, 2, 3, 4, 5, 6, 7 wick reversal that we saw back last week. Tuesday morning again before we saw this drop off. Possible move up if we breach that. So go back into this range. So 198.10. Let's make it 198. So you probably, if we did get a breach, which is by no means certain, of course, you've got a really nice couple of levels there for stop placement and for any take profit. I would suggest today, with all the headlines zipping around at a great speed, you may benefit from trailing fairly aggressively. Certainly wouldn't shy being doing so. I trust that's in your trading plan. Let's have a look at the ASX. I've already ascertained that it is only slightly up. Are we still dropping on that, or we're recovering a little bit? No, we're sort of flattening off a little bit in the last hour. Okay, sort of interesting. So the market takes a breath and digests the news that's come across. Hi, Lita and Sonia and Wayne. We're watching on YouTube amongst others. Thanks for the hellos. If you are watching this on YouTube or on catch up, then if you wouldn't mind just clicking a like that little thumbs up button, and making sure you subscribe so you don't miss a stream, then that would be fantastic. Right, okay, so let's just check out some ASX stocks, and to do this, we're going to quickly see if we can find the scanner and use that. So here's the ASX scanner. So resource stocks doing well, gold stocks, let's just check out a few. Evolution Mining have been a bit shy, I think. But you can see there, this is going to be a really, really common picture There's Evolution Mining up at 1310. That's resistance there, of course. If we look at, just give me a. Oh, I don't want RMD. I don't want ResMed at all. Don't ResMed doesn't look good in the healthcare sector. We actually wanted RMS. That's the wrong bit. So you can see RMS looking really strong again, challenging there previous highs. And this is indeed record highs for this stock. You can put on WGX if you want to. West Gold Resources. That's up 4.75% today. Just see where these land in the last hour. Gold's been helped up not only by the geopolitics, but I think what's happening with the Fed, what's happening with the USD this morning, all helping. So there you go, 660 is the level to watch on WGX. Remember, this was chart of the day all the way back when it was sort of around about this 360 level. It's not that long ago. Elsewhere, it's lithium stocks again. Look as though they're doing pretty well. PLS we referenced, that's testing highs there. And if we look at mineral resources, maybe again continue to look really strong. So lithium stocks outperforming. Really interested in how the banking stocks are doing in light of the fact that we've started US earnings season. We thought we might get to this 200 MA at around about 211.78 on Macquarie, which is probably the most responsive of all of the major banks in Australia. But that's just sort of stalled over the last couple of days. It seems that the money's gone elsewhere. I wonder where. So yes, the banks are jumping up and down with glee. Let's just check out LIC as well. Liontown is just jumping ahead again. Again, lithium stocks. LYC is looking strong again. You can see it's up today. The key level to watch on this is this level here. It was the close on this candle back in November and the subsequent one here. Its attempt to breach. Looks as though that sort of 1560 level is worth keeping on your radar for right now. But it's hard to get past gold stocks or lithium stocks right now. They're just outperforming by a distance. But if you want something different, let's see if we can find something different. Domino's Pizza, let's see. Oh, there's a really nice break on DMP. So this sort of takes us up to a level of interest around about 23.50. Might get stuck around about 25 if we get some continued buying in this, but that's certainly good. Elders worth having a look, maybe? No. And let's have a look. Side sector, we're doing okay. So look at uranium stocks. Paladin just not looking interesting at all. It pulled back again. Best that can be said about that is it's neutral on the day. And one last one. See if we can find something special. Let's have a look at NXT. Not one I've had a look at often. It does look as though it's found a bottom out, but I'm not really sort of that amused unless it. Unless we're going to breach of 1320. Anyway, it's a good to keep on your radar here to obviously pick your favorite lithium stock, pick your favorite gold stock, and those are possibly where it would land. Into the US, airlines doing well. Here's LUV. You can see they've breached. Watch, of course, watch with all the US stocks. Watch with the ASX stocks as well. Kick off the earnings season in about 3 weeks over here. But here's LUV, really nice move on Friday, which takes us to levels not seen since back in 2022. So very, very attractive move on LUV. As I said, a lot of the big tech did well, but a lot of them are stuck in ranges. There's Meta, for example. Nvidia, but stuck in a range. Netflix continues to move down. Netflix got earnings this week. I think they might have. Let's have a quick look. Still in bank territory. Let's try Netflix. I'm pretty sure Netflix is one of the first big thing to report. 20th. Okay, next week. Okay. So this is what you do. You just have a quick look. Let's just make sure LUV haven't reported. I know Delta have already. So Delta are due at the end of the month. So you've got best part of 2 weeks to do something about that. So I'm not going to look past LUV as my chart of the day for US stocks. I think it's a nice place to be. Some of the defense stocks might be okay. Let's just have a look at GD. I haven't had a look at a GD chart. So GD and Lockheed Martin are the two to have a look at. So we had a little bit of a wobble pullback thing. And we're retesting highs from October at 360-ish. Walmart come at the end of the earnings season, so it'll be about 3 weeks away now, but they're moving back up towards 117, which is sort of interesting as well. Anyway, that should cover it for today. I hope that's been interesting and useful. Let's just check back on gold and see if we've sort of stabilized a little bit for right now. Yeah, we're just pulling back. We've got about a 30% retracement on. Not even that, sorry, that's nonsense. If we look at where we closed on Friday, 1.8%. So that's top to bottom. It's around about 9,000 points. Yeah, it's actually not a bad guess, but a little less than 30%. 30% retracement. You can see some temporary buyers coming back in. Be interesting to see what happens here. You can see that volume dropping. If it continues to drop, then you might see this push back up towards this 4,600 level. Anyway, trade safe. Just be aware that today is, I would consider to be a higher risk day. Despite the absence of data, I think there's enough going on geopolitically and internally in the US to merit keeping an eye. So just bear that in mind in your decision making today. I hope that's been interesting and useful, and we'll catch you again on this session on Thursday. We've also got Inner Circle on Wednesday. Make sure you don't miss that. And of course, for those of you doing other stuff, I'll see you on the webinars in other places. But in the meantime, trade safe. I'll love and leave you. Thank you very much indeed. And thanks, Jonathan. And Wayne and everybody. You take care of yourselves, eh?